Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of McCormick Company Incorporated, ticker symbol MKC. McCormick Company is the sixth largest position in the Fundsmith portfolio managed by Terry Smith, who's been referred to as the English Warren Buffett. McCormick currently makes up more than 5% of their portfolio, and Fundsmith owns more than 6% of McCormick overall. At the time of recording this video, McCormick stock is trading for just under $81 per share. Year to date, their stock price is down 16%. Going back over the past year, their stock price is down 8%. Going back 5 years, their stock price is up 11% compounded annually. Going back 10 years, that's about 10.5% compounded annually. And going back 17.5 years prior to the global financial crisis, McCormick has returned about 9% compounded annually, plus dividends. So McCormick is trading just over their 52-week low, which is down about $25 from their 52-week high. It's about a $40 spread here. A little over 2 3/4 of McCormick's shares outstanding are sold short currently, and McCormick is just under a $22 billion market cap. For some more background about the business, in its 130-year history, McCormick has grown to become the leading global manufacturer, marketer, and distributor of spices, herbs, extracts, seasonings, and other flavorings. Beyond end consumers, McCormick's customer base also includes top quick service restaurants, retail grocery chains, and other packaged food manufacturers, with about 30% of sales generated beyond its home turf, to include 150 other countries and territories. In addition to its namesake brand, the firm's portfolio includes Old Bay, Zada Reigns, Thai Kitchen, Frank's Red Hot, French's, and the recently acquired Cholula brand. The company was founded in 1889 and is headquartered in Hunt Valley, Maryland. For our fundamental analysis today, we're going to be performing a modified version of the 8-pillar analysis popularized by Everything Money, taking a look at 8 key financial metrics to come to a holistic and beginning understanding of McCormick as a business based on those fundamentals. So let's get right into it. Starting off with pillar number 1, we want their average 5-year PE to be below 22.5. So currently McCormick is trading at 32 times earnings. Over this time period, they've gotten down to a low of 16 times earnings and up to a high of about 38 times earnings. However, overall, McCormick is trading at an average of a 29 times earnings multiple. So that is going to be an X to start off on pillar number 1. Pillar number 2, we want their average 5-year return on capital to be above 9%. Over the course of decades, a stock is going to return approximately what its underlying business returns, and those business returns are going to be captured here by return on capital. McCormick produces pretty steady returns on capital. Over this time frame, they're averaging about a 10.5% return each year. So that is our first check on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. McCormick has grown revenues from $4.7 billion in 2017 up to $6.3 billion in 2021. Another check here on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. McCormick has almost doubled net incomes over this time. They had $477 million of net income in 2017, and that's increased to $755 million of net income in 2021. So that is another check on pillar number 4. So far through 4 pillars, we are 3 for 4. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business buys back shares and repurchases stock, they're increasing your ownership percentage of the business, ultimately increasing your percentage of the business's profits that you're going to be entitled to without you having to spend a dime. Here, unfortunately, we're seeing the opposite. McCormick has slightly diluted shareholders over this time frame, and that's going to be an X, as they've issued about 13 million new shares. This is slight dilution, and it's not overly concerning. It's by no means egregious, but it's still going to be an X on pillar number 5. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's the lifeblood of any business, and it can be used to pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back into the business. A business's abilities to produce free cash flows from now and until Judgment Day, discounted back by some reasonable interest rate, is ultimately what that business is going to be valued at. So in 2017, McCormick produced about $633 million of free cash flow, and that has fallen to only $550 million of free cash flow in 2021. So that is an X here on pillar number 6. Over this time frame, in an average year, McCormick produces about $685 million of free cash flow. So we'll be using that number in pillar 7 and 8 when we evaluate how the business utilizes leverage, and then analyze how their ability to produce free cash flow compares to their overall market cap. Pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So at the end of the last fiscal year, McCormick had about $5 billion of net debt. So these are the liabilities that are left over after using all their cash. And when we multiply their average 5-year free cash flow of $685 million times 5, that only brings us to $3.4 billion. So that is an X here on pillar number 7. McCormick is utilizing more debt in their business than we're necessarily comfortable with. Being overly levered just puts stress on a business overall and gives it less financial breathing room. Also, during the periods of hard economic times, it's highly levered businesses that are going to do the worst and that might have the potential to fail. Now, McCormick is a very consumer staple company that's been around for over a century, so I'm not saying that in a recession or in any sort of financial crisis they would fail, although that's a possibility for any business. What I am saying is that the business is overly levered compared to what we would want it to be. So that's an X here on pillar number 7. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20 to give us a starting point of a reasonable valuation of what we should pay for the business. So currently McCormick has a market cap that's just under $22 billion. When we multiply their average 5-year free cash flow of $685 million times 20, that only brings us to $13.7 billion. So we're off by nearly $8 billion here. This is going to be an X on pillar number 8. Lastly, here we're looking at McCormick's dividend profile. So McCormick is a dividend aristocrat. They've increased their annual dividend payouts for the last 35 years, which puts them in select company with some of the most enduring businesses out there, such as Procter & Gamble, Johnson & Johnson, and Coca-Cola. However, just because a business is a dividend aristocrat does not necessarily mean that their dividend is going to be healthy and grow forever into the future. To determine the health of a dividend, we have to see that it's supported by a business's cash flows and that it's sustainable now and into the future. So over the last 5 years, McCormick has increased their dividend per share in all 5 years. And in 4 out of these 5 years, they've produced plenty of cash to be able to support this dividend, keeping their dividend payout ratio below 40%. However, in the most recent financial year, McCormick only produced $2 per share of cash flows, and they paid out $1.36 in dividends, meaning that unless McCormick is able to increase their cash flows now and into the future, this dividend is going to be a higher and higher percentage of their cash flows over time. So this is something to keep an eye on. While it looks like 2021 was potentially a down year for them, as overall their cash flow decreased over this time frame, and as we saw earlier, they upped CapEx. This past year did put some pressure on their dividend, and potentially future dividend increases, if they come, may not be as large as they have been in the past. So again, that's just something to keep an eye on here. So in summary, McCormick checks the box on 3 out of 8 pillars. Based on our valuation metrics, the business looks expensive. While it does produce slightly above average returns on capital and has grown their revenues and net income, the business has slightly diluted shareholders. Their free cash flow has actually decreased over this time frame. The business is utilizing more leverage than we're necessarily comfortable with. And relative to their ability to produce free cash flows, the business looks expensive based on what its current market cap is trading at. Also, we're starting to see some pressure on their dividend, which has grown for the past 35 years. Another thing to note about their dividend is that McCormick has paid out dividends every year since 1925. So they have 97 years of dividend payout history, and over the past 35 years, they've increased that dividend each year. But again, we're starting to see some pressure there. Keep an eye on that. If you're interested in investing in McCormick because of that dividend, you really want to learn and have a better idea about where this business's free cash flows are going to be 5, 10, 15 years from now. So this type of analysis is a holistic and beginning analysis, really to determine whether it's worth your while to dig into McCormick and learn more about the business overall. It's not financial advice, and it's not a buy or sell recommendation of McCormick. You should always do your own research and consult with financial or legal experts when applicable. As a value investor, you'd never want to invest in a business without understanding that company inside and out and truly understanding the essence of the business as if you owned 100% of the business. So with that said, that's it for today's fundamental stock analysis of McCormick Company Incorporated, ticker symbol MKC. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about McCormick with me, and have a great day.